China has a massive generational hurdle to overcome, and today we're going to talk about just that. I'm going to show you the actual data. I'm going to show you the statistics to explain exactly what I'm talking about. You've heard about the ghost cities in China. You've seen empty houses. You've looked at what's going on with Evergrande and Country Garden, and I'm going to show you that today, but I'll connect that in with the debt circumstance because I think that is really missed in the grand scheme of things. It's not just about having empty homes, it's about the debt. So let's look at that here today. Typically, an expansion of debt would be used to pull the future to the present. That's what debt is for. Debt is kind of like, okay, we got a problem, let's spend a bunch of money, let's bring it in, okay, let's fix everything, let's pay that off, let's get that done. Okay, it's behind us now. But now the way that works is, okay, let's stimulate. Oh, the stimulus is running out. Okay, more stimulus. Okay, the stimulus is running out. Okay, more stimulus. China's doing it. The US, Europe, everybody. They're all doing this. China's debt is, quite frankly, insanely high. It's much worse than what you've been told. It depends on what you look at. The shadow banking system, tens of trillions worth. You can look at the local government financing vehicles. We'll talk about that in a sec. I mean, there's trillions here, trillions there. I can't even keep track of it. And I know that it isn't being kept track of for obvious reasons. Why don't we look into it? Why don't we just talk about the fact that even 1.4 billion people can't fill all of China's vacant homes, ex-official admits. Now, I'm not so sure about this, okay? I know the situation is quite bad, but here we go. Even China's population of 1.4 billion would not be enough to fill all of the empty apartments littered across the country, a former official said, in a rare public critique of the country's crisis-hit property market. China's property sector, once the pillar of the economy, has slumped since 2021 when Evergrande defaulted on its debt obligations following a clampdown on new borrowing. You've seen that, okay? Other countries, on the other hand, learned from their mistakes. So you look at United Arab Emirates, specifically Dubai, that they had a massive, they were doing the most silliest things leading up into 2008. And when real estate came collapsing down, they really suffered. Okay, so anybody who went in and scooped up real estate got it for pennies on the dollar. And so what happens now is essentially before they even dig into that ground, they've already got all the money. The construction needs to have that in order to get the permits. And then the individuals, they're paying in. They don't have to worry about losses from any of the others. They don't have to worry about the company taking a loss because it's all understood that this is already paid for. Pretty interesting. Now, it's a different world, different environment. And of course, China is not Dubai. But I think it's interesting to see that we can learn from our mistakes and adapt. And so that's why you see so much growth. I mean, you see money coming in and you don't see it going out. I mean, there are different reasons for that, obviously, but look at China, okay? Total debt is well over 300% of the GDP. The GDP is the economy, okay? And so when you're growing at that level, you simply, you can't manage that. It is not manageable. Wary foreign investors are selling domestic Chinese bonds. And we've also seen the equities too. Very important, okay? They are selling off of equities. This is really something that needs to be understood. The outstanding amount of China's augmented government debt reached the equivalent of 126% of GDP. So when you break that down, there's a lot here, I know, but just a few things. And you'll see that local government financing vehicles onshore, most of it, that's $60 trillion. I feel like a lot of this debt has been packaged up, that this debt has been moved from one place to another, and it is being covered up, but ultimately You cannot fix a problem like this. And so it rears its ugly head in the worst time, the worst place, and the worst scenario possible. And so when you have this real estate crisis going on, it could simply just continue to create damage there. It could put a problem in there for China and their finances as a country. And it could make foreign investors say, no, thank you. I'm not going to put my money in China. I don't trust China. And that's what a lot of them have done recently. But they see the growth potential. They see what they're doing with the BRICS. And so there's, obviously this toss-up. Based on broad financial sector claims to governments, we estimate the amount of hidden debt to be about 55 trillion. Okay, so we know that there are trillions of dollars worth of debt that's being hidden out there, that's put in some sort of shadow banking, that's unknown to the public of China, but of course the rest of the world. And so that makes it very difficult to assess how bad things really are. And they're doing this on purpose. They want to be a little bit secret about what they let everyone know so they can have more control, so that they can have more oversight and less transparency. An even bigger housing crisis threatens China's economy. 2 years after Evergrande's fall, distressed property giant Country Garden could create worse problems. And this is new information, everybody, okay? This is not what we were talking about many months ago. We are still hearing about this, and it is still unfolding. So we see that Evergrande's got a problem. Country Garden's got a problem. And it's for one reason or another. In the case of Evergrande, it's the most indebted. But in the case of Country Garden, they have more properties. All right, so there's more people affected by this. And so it's really an unfortunate circumstance when you see these stocks bottoming out like this. The bonds are bottoming out. You know that investors are fleeing, and that makes it harder for these companies to simply make ends meet. And so the government is trying to come in and do their thing. How much stimulus are they going to provide? Well, so far it hasn't been enough to make the markets satisfied. They've done a few things here and there. They've definitely done some stimulus. It's like a little bit here and there, a little bit here and there. But we need a big bazooka for the markets to simply turn around and say, okay, that was it. That was the bottom. Like they don't have a QE1. As soon as the Fed introduced QE1 and all the TARP bailouts, like all that stuff, once those two things were happening, it was game on. Okay, China's not doing that right now. 2 of China's strongest developers face ratings cut by Moody's. Okay, this is just one after the other. Doesn't matter. Doesn't matter who. We're seeing this all over. The developers are all getting hit. And if they are coming down in rating, you might say, who cares? But these funds that are investing in them, the big funds, $1 billion here, $1 billion there, we're talking about companies that will say, okay, we only will invest in this rated bond. And so if it's lower than that, they got to sell it. And so that's why that is an issue. What are some other things going on in China? It's not all just bad stuff. It's not all just about the problems they were having. Look, I wanted to tell you this. I think this is one of the most underrated things about China that's going on right now. And it could be a concern for some. Look at this. China currently holds an estimated 96% of global copper inventories, 75% of global aluminum, 70% of corn, 54% of wheat, 30% of soybeans, 22% of crude oil. Can you believe that? I had this look at it. I mean, it seems impossible to me, but that's what it says. So they are holding on to massive stockpiles of all these different commodities. Now, do they think that maybe they're going to have some issues? Well, they ran into some issues before. Maybe they don't want to get burned again. But they're holding on to all these commodities. And generally, you would hold on to a lot of commodities because, you're going to use them. All right? And so if it's copper, you're going to do that because you're going to build more houses. You're going to do more things. It's going to be used in electric vehicles. So, hey, let's buy it all. At the same time, you would think that you would buy it today if the price is going to go up much higher, right? Maybe they believe that. Chinese gold buying is driving a paradigm shift in bullion. This is just one country. A lot of emerging markets are still buying gold today. They don't want to invest as much into the US dollar. And so we are seeing that across the board. Poland's doing it. Other countries have been doing this. And of course, India as well. Very common. But we see that for a lot of the cases. And now what's happening is, I believe this is the first time ever, there's a decline in the usage of the dollar and an increasing usage of yuan in cross-border transactions. And there's different reasons for this, I'm sure, because of the sanctions, because of everything else. But that's been the way that they've wanted it. They want to use Chinese currency when they're dealing with China. And that's a matter of fact. It's been a while coming, but it has accelerated in the last little while. Okay. And so we see these big, broad changes. You got the BRICS. You've got the US dollar hanging in the balance as a result of all this. But China has their own problems. And I'm trying to bring you a balanced view of what's going on. Okay? A few things. What can you do about it, right? If China goes into deep recession, commodities could fall. So you got to be aware of this. If you are invested in commodities or the companies that are exposed to commodities in some way, then watch out, because those prices could fall. And I would be, if it's like, for instance, an EV company and copper is suddenly 50% cheaper, they may buy a pile of copper at that cheaper price. That's good for them. Okay. So keep that in mind. Okay. It's not all like that. But if you're going to invest in commodities, just be aware of that. Watch what China does. US farmers could feel this also. So if China's buying a lot of soybeans from the US and they say, no, we don't need as many soybeans as we did before, that's going to hit the farmers in the US, transportation as well. Billions annually go from the US to China. And this has been going on in basically every industry. So know your exposure. I know we always talk about the exports from China to the US, but actually, you could see these charts, and you could do so, anywhere really. I mean, there's so many different websites, but in my searches to try to find the most recent data, I found, anything that you could imagine goes the other way from the US to China. It's not always the other way around. So understand the dependency here, but also when you're an investor, watch your exposure there, know what's going on, being a little bit more intelligent about this and taking the time to look into this. Trading economics. You can go to a search engine. Trading economics will tell you a lot of that. You'll get that data for basically about anything. So you could see it for yourself. All right. If you want what I call compass, your financial journey starts here. That is, something that I think is so important. And I made it free for everybody. I made it free, and about 400 and something people have been through Compass. This is an incredible asset to you. There's no paywall. There's no email. There's no advertisements. I made it 100% completely free in hopes I'd provide more value for you so that you'll come back day after day. You'll invite your friends and family to this page, okay? And then maybe they'll ask more questions after. But this is like totally financial education. I call it your financial journey starts here. TheMoneyGPS.com, okay? TheMoneyGPS.com. Comment of the day. Thank you very much, Sparky, for your comment. My grandmother lived through the Depression. I wished I asked her more about it, and would have thought that these things, who would have thought that these things repeat? Thanks for all you do. Yes, it's true. We have these repeated patterns, and we could learn from people too. I love to ask people questions all the time, no matter who they are, no matter what they do for a living, because I'm just trying to add to my database. in hopes that at some point down the road, that's going to be important information. And we should be sharing the information that we have. It's very important stuff. So I hope you appreciate this video here, and I'll see you on the next one. Take care.